Hi everyone, welcome back to my channel. And today I'm glad to share that we have crossed over 1 lakh followers on LinkedIn, and it's been a pleasure connecting with you all. And I wanted to share this with you that we have crossed 1.46 subscriber on my YouTube channel, and it's really overwhelming experience because I have started this channel this year only, and it was like I wanted to help those who were facing or struggling to crack the interview. And I'm really glad that people found it helpful, and many candidates found this channel really helpful. And today, my topic of discussion is going to be interview questions for fresher applying for R2R. So, we are going to discuss all about record to report. Basically, it is a bookkeeping, and freshers often get confused in initial stage when they give interview, so it will really help them to crack the interview. First question is, can you explain what the record to report process involves? So the record to report process encompasses the end to end financial accounting and reporting cycle. It starts with recording financial transaction in GL, general ledger, and conclude with preparing financial statement. So we have three financial statement: trading, P&L, and balance sheet and cash flow. So that is the end part of R2R process. And the initial inception is creating a GL, general ledger, and tracking the transaction which is happening. The process includes tasks like general entry posting, account reconciliation, accrual, and closing activities. The objective is ensure accurate and compliant financial reporting. So this is the first question, and this question in itself uh, is the whole process of R2R, and the answer is so great that you will find each and everything while you will work in a professional world, that this is how the posting is done, this is how the account reconciliation is done, and this is how closing is done. So it's really beautiful to work in R2R. Now our second question is, how would you approach reconciling accounts at the end of a month? At the end of the month, I would compare the transaction in the GL to supporting documents and external data. Any discrepancies would be investigated and resolved. Suppose I have made a general entry of few amounts, and that is not supporting the documents I'm carrying. So I should investigate the matter, why there is a difference, what was the reason that I have posted with this amount, rather I should have posted with that amount. So we need to check what was the scenario in that situation. It can be happen that the PO has decreased, and now we need less goods or services. That is the reason we have decreased the amount, or that is why the reason is there, because of the discrepancy. So we need to investigate that. Now, our question third: explain the concept of goodwill in accounting and how it is treated in financial statement. So, goodwill represent the premium a company pays when acquiring another company over and above the fair value, and its net asset. So whatever extra amount we pay to the company, other company, when we buy the company, that is goodwill. That is the market value they have created because of their name and fame in the market. So that is the goodwill part which we pay. It arises from factors like reputation, as I told you, customer relationship, brand value. In financial statement, goodwill is initially recorded as an asset on the balance sheet. It is not amortized but subject to annual impairment test. If its value declines, an impairment loss is recognized on the income statement, reducing the goodwill carrying value. How do you ensure the accuracy of financial record? So, how we will ensure that there is an accuracy of financial record? Ensuring accuracy involves careful validation of transaction. I would double check entries for accuracy, verify they are appropriately categorized, and review supporting documents. Regular account reconciliation are crucial to identify and rectify error promptly. Attention to detail and meticulous are key of maintaining accurate financial reporting. So you need to double check whenever you are making any transaction or you are recording any transaction. You should make sure that you are putting it down correctly, you are writing it down correctly. So the best way to do is that you should be conscious enough, you should ensure two time or you should double check your entries whether you are posting it correct or not. So that itself will validate and ensure there is an accuracy in the financial statement. Now the fifth question: what do you understand about BS reconciliation, that is balance sheet reconciliation? So balance sheet reconciliation is basically involves comparing the balances in the GL and their subsidiary ledger or external record. The process helps identify discrepancies and errors, ensuring the integrity of financial statement. For instance, reconciling bank statement with the general ledger help uncover any discrepancies in cash balance. How does the reconciliation, now I'm going to sixth question, how does the reconciliation of revenue differ between the accrual and the cash basis of accounting? So as we know, in our like old era, you can say, we used to like everyone used to use cash basis, but now we are doing business, everything cannot be in cash, all the transaction we cannot make in cash. So we follow accrual basis rule for recording our all transaction. So whenever there is an transaction which has accrued, at the same time we have to make the records in our books of accounts. That's how we will make sure that everything is correct and everything is recorded when it is needed. So accrual basis accounting recognize revenue when it is earned and expense is when they are incurred, regardless of when cash hands. In contrast, cash basis accounting records revenue only when cash is received and expenses only when cash is paid. Accrual basis provide a more accurate representation of company's financial performance and position, while cash basis is simpler but may not reflect economic reality. So this is how the R2R questions is asked to the fresher. And sometimes they also ask about the balance sheet and one of the component of balance sheet. Suppose they will ask you what is current asset and what do you understand by current and non-current asset, how you will differentiate between both of them. So you should be mindful enough to prepare you should prepare all the items of balance sheet, and all these questions will really help you to do that. So before appearing for the interview, I would really suggest you to go through each and every questions, understand what the question is trying to ask and what the interviewer wants to know from me. So basically he wants to see whether you are capable of performing the job or not, whether you will be able to understand all these concepts or not. So please prepare thoroughly and be confident and be outspoken that yes, I know these details, but I'm ready to learn and ready to grow, and I would really appreciate if you can give me this opportunity to grow. So I hope you like this video, and thank you so much for watching. And please subscribe to the channel and also ask any question if you have. It will really help others as well. Thank you so much.